morning, guys, or good afternoon for me, probably good morning for you in the UK. First of all, apologies. I am absolutely loaded with the flu. All right, so I do apologise if I'm bloody coughing and spluttering. But every week, I always do this for the guys, no matter how ill I am, because it's important, right, to get it done and dusted for the rest of the week. So in this video, we're going to be running through fundamentals from last week, all the data from last week, and all the potential news from the week coming up, right, and what we're kind of potentially looking out for. We're covering oil. Look, if you look at oil here, I actually covered this before it went. Look, you've got this beautiful, some people call it imbalance, some people call it order blocks. However you know this, small candle with an engulfing, it always comes back to retest, right? Boom. And that is a beautiful entry. I never caught this entry. I already entered up here. It stopped me out here. So I was up like $5,000 on that trade. Potentially on Monday, I'm probably going to re-enter this trade with my stop loss above these highs, round about here. All right. And I'm going to write it down. I would love to write it down to here. This is my favorite area because I want to buy it from here, right? It's the, when I say favorite area, what I mean is it's the most favorable area to buy from because it's a great area of value, right? And that's what we really look for. So I'd love to see it hit here. If it comes to here and rejects, yeah, okay, we could look to enter buys, change it around and enter buys. However, excuse me, lads, this is my preferred area, right? TP2. So I'd love to hold it down to here. We'll cover that in a bit. Let's jump across now. For fundamental type stuff, predominantly I actually use this, right? Trading Economics. You can see here Trading Economics. So it's www.tradingeconomics.com. It's 100 times better than Forex Factory. You get so much more information. So maybe you'll look on Forex Factory, right? And there'll be like 4 folders here for France. But you'll look on Trading Economics and there'll be like 6. You know what I mean? You get so much more information. Not only that, when news is about to drop, like let's say, look at this one here, right? And it says 10 a.m., you know, news is about to drop for China, right? The minute the clock strikes 10 a.m., these numbers instantly come up, guys. Like the click, as soon as it hits 10, bang, the numbers are on here. And if you look at the market, let's say it was a USD pair, right? Not China, because we don't trade that, but let's say it was USD, it's, 7 p.m. CPI, right? You look on Trading Economics, you will get the numbers instantly on here. And if you look at the market hasn't even moved yet. And if you look at Forex Factory, it's still giving you that kind of little loading symbol, right, as if it's loading up. And it takes about 3 to 5 minutes. So you can actually look on here. And if you trade on big news moves, you can actually jump in before you start getting hammered with slippage and before the market's even moved. It's phenomenal, right? Excuse me. I highly recommend Trading Economics. Usually for my weekly rundowns, I do come back across here just because it's easier on the eye, right? That's why I do that. So this one's easier on the eye, and most people use this, right? That's why I'm doing it. I may, jump across later, but let's see. Now, what I do is I go through each pair individually, right? Apart from Aussie dollar, New Zealand dollar, and Chinese renminbi. I do them all together, okay? It's because they're all closely correlated. So that says this week. It's because this is Saturday and it's still part of the trading week, right? If I'd done this on a Sunday, it would say last week, okay? Excuse me. So let's have a look at what we've got between Aussie, China, and NZD. Now, in case some of you are unsure what's the correlation, why do you do China with Aussie and NZD? They're very closely correlated. Basically, China does so much business, between the mines and blah, 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 and production and all this other stuff between Australia and China, that if anything is affected in China, it also affects the AUD and the NZD. More so the AUD, but it does slightly affect NZD as well, okay? So an easy way to remember it, and you can write this part down, okay? If China is showing strong numbers, it gives strength to the AUD, okay? If China is showing weak, it gives weakness to the AUD, right? It pulls AUD down with it. Likewise, USD is also closely correlated with AUD, but they're negative correlation, right? China and AUD are positive correlation. All that means is they move with each other. So if China's positive, Aussie's positive. If China's negative, Aussie's negative, right? Aussie USD are negative correlation, which means they move in parallel to each other. Okay, so if USD is strong, AUD will become weak. If USD is weak, AUD will become strong. Okay, so they're negative correlation. And you can make a note of that because it's very important to know. Excuse me, when you're trading certain pairs, right, it can help you a lot. So let's crack on and get on with the news. Fundamentals this week. What we're looking at. Pardon me, guys. So we have China CPI year on year, slightly down. It's not a biggie, but obviously it's showing less, right? And that's year on year. So that's the one that we really do want to take note of. PPI year on year is up. It's still negative, but it's up, right? So that's kind of showing some growth. So there you've got mixed data, right? It's not both positive or both negative. You're getting mixed. Interest rates 5.5. There's no rate cut for NZD yet. That's fine. There's nothing really that we care about on this, okay, for last week. So no big news last week. Let's see what we've got next week coming up, if anything. China GDP quarter on year. Industrial production year on year. That's very important because China is a manufacturing production economy, right? They don't really provide, well, they do provide services, but they don't. Every single country provides services and manufacturing, right? But one will always be more dominant. For example, China is clearly a manufacturing country, right? It will provide services, but it's mostly manufacturing. It makes everything for the whole bloody planet, right? So you would expect manufacturing to be high and services potentially low, right? Below 50. If they're above 50, then that's also fantastic. The UK is not a manufacturing economy, right? It's a services economy. We provide banking services and so on and so forth, right? So we would expect manufacturing to be below 50, which is perfectly normal because we're not a manufacturing country, right, economy. And we'd expect services to be above 50, which is bullish, okay? So I'll cover that more when we come to it, all right? Excuse me. What else we got next week? China, retail sales year on year, unemployment rate, okay? So we don't really, for these ones, we can have a look at it. We don't really care too much because we don't trade the Chinese currency, right? But for like production and manufacturing and so on, we do care because that's going to affect Aussie. NZD CPI quarter on quarter. Okay, we want to see that. Aussie, we've got employment change and unemployment change. Pardon me, next Thursday. So we do care about that, okay? So that's all we've got next week. Wait to get my notebook. Where the hell is it? Here we go. So what I also do, guys, I usually have this prepared. I don't know why I just forgot this time. What I do is, every single week I do this. I get my notebook out and I write strong, weak, neutral. Okay? Strong, then weak, then neutral. And that's done on purpose. If you're sitting at home thinking to yourself, well, wouldn't it logically be strong, neutral, and weak? Because neutral's in the middle, right? Of course, logically, yes. But there's a reason why I do this system, okay? At the end of it, we work out which currency pairs are strong based on genuine economic data, not just because we drew a fucking line on the page and if the candle breaks it, it's going to melt. That's fucking bullshit. We work out which currency pairs are generally strong based on hard economic fucking data, okay? So we write strong here. We work out which ones are weak and we put them down here, like pound, Aussie, CHF, Japanese yen, you know what I mean? And then we put which ones are neutral. The reason why we put neutral at the end is because at the end, what you want to do is you just want to score off the neutral and don't look at them. And you want to then match up a strong pair with a weak pair. And you want to trade strong to weak because that fucking increases your probabilities massively, okay? So that's what you want to be doing. For now, Aussie is strong. AUD is strong. NZD is weak, in my opinion. And remember, it is my opinion. People have different opinions on the matter. And what have we got right? So we've done that for next week. Now we just jumped into CAD. Turn these off. We want to see last week first. So, okay, so there was nothing for CAD last week, right? We all know CAD's pretty weak. What we got next week? We have manufacturing sales month on month. So month on month, we do care about them, but remember they're short term, so it's maybe going to give you a little short move, but it's not something to focus on the long term. Okay, pardon me. Canadian CPI month on month, we do care about it. Median CPI year on year, yes. So we want to see all this, right? It's all CPI trimmed, common, blah, blah, blah. If you want to know what the difference is between median, trimmed, and blah, 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 all you do is click this little envelope here. And it will tell you, right? There you go. So don't ever think to yourself, God, I need to memorize all this. You don't have to memorize it. You just fucking click on the folder. It'll tell you. Let's have a look. And you can see here all the previous rates, right? So it's been decreasing. And what are they expecting this time? They're expecting a further slight decrease. Okay. So we'll check that out. And then on Friday, we have a core retail sales month on month, retail sales month on month, IPPI. Okay. So Tuesday and Friday next week, we have news that we really care about Canadian dollar, right? In my opinion, Canadian dollar is still weak. With Canadian dollar, you also may want to write this down. You have to remember that Canadian dollar, even though their economy is really shit and everything's too expensive to live, people are having 2 jobs and can barely fucking put petrol in their car. The economy's shit, right? Therefore, the currency doesn't have strength. It's weak. It's shit. However, oil gives strength to Canadian dollar. Okay, so right now is a great time to be trading trading sales in this, and especially going short in Canadian dollar, because if oil's coming down, there's no strength being pumped into Canadian dollar, right? Because their economy is bad. Obviously, you need to take into consideration these numbers that come up. It might give it a temporary little boost. However, for now, you have to remember that oil gives strength to Canadian dollar. So if you look at the oil chart and oil's coming down, what does that mean for Canadian dollar? It means it's giving extra weakness, right? So you might want to bear that in mind for when you're trading other pairs against the Canadian dollar. Like, if you're going to go, if you were going to go long on a Canadian dollar, you might want to rethink that idea, okay? Because oil is always coming down. So any chance that Canadian dollar had to fucking pull itself out of hell, basically, it's gone right now, okay? Because oil's coming down. So you have to bear that in mind, all right? A nice little golden nugget for you. So far I've got strong AUD, weak NZD, weak Canadian dollar. All right. So moving on, because there's not really, there's not much. Excuse me, guys. CHF, we always have a look, right? Don't ever look at a pair and be like, there's no point looking at that. Always look at it, because you never know, right? CHF, look, there's no news there. Next week we've got PPI month on month, free balance, so there's nothing, right? CHF for me, it's in between neutral to strong, depending on which pairs you're coupling it with, right? If you're putting it against the USD, I'd be like, nah, I'd be holding off. But if you're going to trade it against like Japanese yen, which is super shit, then obviously you could do it, right? So I'm going to put CHF in neutral for now, because when currency pairs are a bit iffy and you're a bit, nah, is it, isn't it? Then look, if there's any doubt, there's no doubt, right? That's the way we say it. If there's any doubt, there's no doubt. Just fuck it off. You don't have to trade that. Why? Because there are plenty of pairs which will be strong and plenty of pairs which will be weak, and you can take that low-hanging fruit, right? Why would you take a trade that's like, maybe 50-50 when you can go for one that's 70 or 80% in your favour, right? That's the whole name of the game. Let's go back. What we got coming up next? Euro. Let's have a look. What was Euro last week? Where's my book? What was... Oh, here's my other one. That's what I was looking for. Yeah, Euro was neutral last week. CHF was weak. Okay, so I'll keep that beside me and I'll cross-reference them right in a minute. Euro was what last week? Weak. French parliamentary elections, they are having a big effect on the markets. France is in a bit of turmoil right now. So when it comes to Euro, when we are looking at Euro data, manufacturing, services, PMI, and all this kind of stuff, CPI, PPI, of course, it's nice to see all of them, like Italy and Spain, if it's the year on year, right? You can have a little look. However, when it comes to Euro, the only two countries that we actually care about is Germany and France, okay? Because they are the only two countries which have the sheer mass and volume to actually make a difference in the euro, okay? So bear that in mind. You might want to write that down as well. It's a good note. We only care about Germany and France. If it's Italy or Spain CPI year on year, or employment, unemployment year on year, then yes, you can have a look at that, all right? Because it's good to have a look at the numbers. But if it's like month on month, quarter on quarter, we don't really give a shit about anything else other than Germany and France, okay? Germany trade balance. Let me just have a quick look, lads. German final CPI month on month, that was the same. Month on month, slightly less. French final CPI month on month. So they're month on month, right? It's pretty flat. Okay, let's have a look at next week. What have we got? German economic statement. Final core CPI year on year. So we definitely want that. I don't know why that's yellow, because this is a big deal, right? Final core CPI year on year. Final CPI year on year. German bond auction. Then we want main refinancing rate, monetary policy. Okay. European Central Bank press conference, German PPI. So there's quite a lot of news for Euro next week. So for me, yeah, Euro at present is still neutral. It's it's not weak, but it's not strong, right? It's in this kind of little land of limbo. And when we go to the actual currency pairs in a moment, after we've done this, I'll show you how I mark up my charts, right? We'll then have a look and see if there's anything to I'll show you the difference. I'll show you what it looks like when it's neutral, okay? So that's next week. We've got big news. All right. And I'll recap these at the end as well, okay? So if you've missed, God, what has he wrote strong and weak again? I'm going to recap it, so don't worry. Excuse me. Sorry, go to last week. GBP member speaks, blah, 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 blah. GDP month on month. GDP is up. That's good. So when things like this go up, you know that an economy, or a country, whatever you want to call it, a state, they're not going to cut rates. When things are still going up and positive, retail sales are up, this is up, that's up, and you're thinking, God, when is the pound going to cut rates? They're not going to cut rates when things are going well, okay? Things have to start coming down by themselves, and when they naturally come down, then they go, things aren't in a good place, now we can cut rates, okay? If things are going up and they cut rates, then what's going to happen is everything's just going to spiral out of control. Everything's going to shoot up and spiral out of control, okay? So they don't want that to happen. So if you see numbers going up, like GDP, blah, 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 then they aren't going to cut rates, all right? Construction output, 1.9, goods balance, index services, manufacturing production month on month. Look, you can see manufacturing production month on month. The year on year is actually looking quite good for the pound, okay? And the fact that this is increasing is actually, it's pretty incredible. I know it's tiny, it's 0.4 from minus 1.6, but you have to apply context. I always go on about this context, right? You can't just look at these numbers on the screen and be like, oh, that's up, that means good. No, you have to think about the whole big picture and put it together. Why is that fantastic for the UK and the numbers aren't so good? Well, it's because the UK isn't a manufacturing country. We're a services country. We provide services, right? Like banking services and all this other stuff. We let the Russian gangsters buy houses and use them as tax havens and all this bullshit, right? We provide those services. That's what we do. Let's have a look at next week. Okay, we've got right move, HPI. That's like mortgage approvals. That's quite good because of it's month on month. So we, it's going to have a short term effect, but we still like to see it, right? So that just means if this is positive numbers, it means if more mortgages are being approved, it means more people are spending money on paying mortgages, which means more money into the economy, which means the economy is good. If the economy is good, that means the currency is strong, right? This is as simple as this, guys. This is how fucking easy it is. Then we've got Wednesday, Thursday, and Friday are pretty big days for the UK. Okay, so we've got CPI year on year, which is going to be good. Core CPI year on year, PPI, RPI, HPI, fuck me. Thursday, we've got claimant count change. That's good. I believe that's unemployment claims. So how many people are claiming unemployment? Obviously, if the number's high, then that's not good for the pound. If the number's low, that means less people are claiming that. Then that number is good, right? Average earnings index. This is good. If people are earning more money. That's a good thing because if people earning more money, what they're going to do, they're going to buy more shit, right? If they keep spending their money and buying more shit that they don't need, that's good for the economy. So the economy's up, the currency is strong. Okay, so that's how you can interpret these things. Unemployment rate, again, very important for us. If unemployment is up, that's not good for the pound. If unemployment is low, that's good for the pound, right? Retail sales month on month. Again, it's month on month, so we do care about it, but we really prefer year on year, right? But we still take into account retail sales month on month. What's that? Forecast to be -6. Last one was good. Let's have a look at what it's been over the time. Okay, so it was down before, it's up. Yeah, maybe less. What time of year is this? You have to think about that as well. So we're in July. So you have to think about things like this, right? You have to think about, right, July, holiday season. Everyone's away on holiday. You know what I mean? I don't literally mean everyone, but you get the point, right? Everyone's away on holiday, so less people are spending money in the UK, so it just becomes logical that retail sales may be down in July. So this is how you can kind of predict, oh, potentially that's right. Potentially retail sales are going to be down. The month before, when it was massively high, why would that be? Because people are fucking spending money in shops to buy all their holiday gear. Do you see what I'm saying? Like it's all these things start to become a little logical. Obviously, there is more to it than just buying holiday gear, right? But you get my point. You get where I'm going with this to try and break it down for you in very simple terms. Excuse me. Retail sales month on month. Yeah, we want to see that. So that's next week for me. Pound is still strong, but pound is strong that it's potentially like it's at that point strong. So it ain't coming down yet. Why? Because they're not going to lower rates as things are going up, GDP, etc. Right? They aren't going to cut rates, so that means pound is still strong. It's still strong. It may be slowing down. It's not going to be flying up. Like GG. It's not going to be flying up like it was the last couple of months or years, whatever. It's slowing down. Yes, I would agree with that, but it's still not a sell yet. Right? Still not weak. What we got now? Let's have a swatch, guys. Japanese yen. We know this is dog shit, but we look at all of them, right? Let's look at last week first. Average cash earnings year on year is slightly up. Now, as I say in all my videos, when you see this red, your natural reaction is to think, oh God, it's down, right? It's not down. It's up. Look, it was previously 1.6, okay? The reason why it's red is because it was less than what they forecasted. That's all it is. I don't like why Forex Factory does that. It's frustrating, actually, because people just look at that. They don't know how to apply the context, and they don't actually know what it means, and they'll see it saying fucking 1.9. Oh, God, that's down. It's not down, it's up. So things are looking up for Japanese yen. Bank lending is up. That's great. So, if the bank are lending out more money to people, what does that mean? That means that people want to borrow more money so they can spend it in more shit. They spend it in more shit, the economy grows. So they're kind of fighting their way out of this kind of negativity. They're still not there. They've got a long way to go, but they're pulling back, right? Two money stock year on year, low. Prelim machine tools orders. So that's good. Obviously, this is a good one. If you don't know what that is, you can click on here, it will tell you. Measures the change in total value of new orders placed with machine tool manufacturers, which is great, right? Because Japan is a manufacturing country. So you want to see this going up, and that's increased dramatically. So that's very good. PPI year on year, 2.6, that's increased to 2.9, as expected. So you may, when it's as expected, when it hits the number as forecasted, you may watch it and see the number comes in, and then the market doesn't move, and you're like, well, that was good news. Why didn't it move? Because it's already been priced in. They already anticipated that it was going to be that number. It came in that number, so they already priced it in, right? That means they previously jumped in earlier. Core machinery orders month on month is down. It's not down massively, but it is down. They anticipated it to be higher. But I mean, -3.2 is not good, right? Revised industrial production month on month is up. So you've really got mixed data there, right? This is called mixed data. You've got good, bad, good, bad, bad, good, and it's just this kind of mixture of good and bad news. So it's mixed data. Overall, Japan is still weak, right? And next week, we've got national core CPI year on year next Friday. That will be good for us. And we have a bank holiday on Monday. So like the Asia market session. I don't trade Asia because it's shit, but if you trade Asia, then just bear in mind there's a bank holiday Monday, okay? So there's going to be zero volume. Trade balance, blah, blah, blah. Yeah, so next week we want to see national core CPI. So again, Japanese yen is still weak for me, okay? What else we got? We have got the grand finale, which is USD. After this, I'm going to show you how to mark up your charts and where you would enter, why you would enter, where you would look to exit, why you would look to exit, and I'll cover it all with you, all right, step by step, so don't worry. Right, last week consumer credit month on month was up. That's massively up. Okay, it was previously 6.5 billion. They anticipated 9.7 and it reached 11.4. That's fucking incredible because it means credit, they're giving people money, right? And people are spending it, which brings strength to the dollar. So if all these things like that are increasing, you have to remember, there's all this talk about the US are going to cut rates and is Powell going to cut rates in September? Is he going to cut rates in August? And all this kind of stuff. Excuse me. They won't cut rates if markets are still showing strength, right? They won't do it. Markets need to be coming down on their own. Numbers need to be coming in negatively, and then they'll be like, okay, when it gets to a certain low point, okay, now we'll cut rates, okay? So yeah, that's a good incentive. So instead of you fucking hoping and praying and crossing all your fingers and toes, thinking, right, they're going to cut rates in September, I'm going to short the USD in September, we don't fucking know that. And if these numbers are coming in good, the last thing you want to be doing right now is shorting the USD, because regardless, it's still the number one currency in the world right now, okay? Let's have a look. NFP Small Business Index, that's up. Powell testifies he was pretty dovish. He's pretty bullish, saying that they're not going to cut rates, blah blah blah, and they're going to take it on a month by month basis. Is pretty much what he was saying, I believe. Crude oil inventories has increased. It's still minus 3.4, but it has increased. 10-year bond auction. Core CPI month on month was slightly down. CPI month on month was in the negative. CPI year on year slightly down. Unemployment claims were down, which is a good thing. Natural gas storage. Core CPI month on month was up. PPI was up. Prelim consumer sentiment was slightly down. So what you've got here is mixed data, right? And this is exactly what's happening. I mentioned in all my videos, you can go back to any of my previous videos each week. And I said, like literally 3 weeks ago, I drew this box up in here and I said, USD is just going to fucking range. It's just going to range like this for ages now. It will eventually break, but it's just going to fucking range, right? I mean, it may even come down to here and, range in between here. But it's just ranging, guys. I already had predicted this, like literally when we were here, all right? And this came up here. I said, look, it's just going to range. And with this mixed data, that's exactly what it's doing. Because when these come in negative, you get weakness. When these come in positive 2 days later, you get strength. And it's just going to keep bouncing around, okay? So overall, for me, USD is still strong, guys. It's still the world's strongest economy. This mixed data just simply shows that things are slowing down, okay? It is by no means weak just now. Let's have a look at next week's numbers, and then we're going to move on, and we're going to mark up the charts together, okay? So, next week we have got tons of news for USD. Empire State Manufacturing. I mean, it's quite important, but it's not really a manufacturing country, right? It's too expensive to manufacture there. But obviously it's important to see, right? Powell speaks again. It's important to see, is he being, bullish or bearish? Core retail sales month on month, important, for the intraday stuff. Retail sales month on month. Import prices. Building permits is quite a good one. Industrial production, okay. Crude oil inventories, because we like trading oil, so we like to see that. Beige book, that's another one that's very interesting. I'm not going to cover that in here because the beige book itself is fucking about that size, and I ain't gonna read that fucking thing, okay? But if you're like, some people are really fucking geeks, which is fine. and they would like love to sit down for their entire Sunday and read that book, right? I don't really care as much as that. I'm happy with knowing the rest of it, kind of thing. Thursday unemployment claims, very important for us, okay? Philly Fed Manufacturing Index, that's also a good one. And that's pretty much it. So we do have some good news. Well, what I should say is big news next week for what we're looking at and what we're not, okay? So as always, what I do is I go through every single pair. Now, as a longer term swing trader, I prefer to mark up on the weekly, but for the purposes of this, I'm going to go through the daily chart, okay? And if we see some that are close, I'll then jump between the weekly and the daily to confirm my entry areas. But I prefer to trade in between the weekly areas of imbalance / order blocks, okay? So Aussie Canadian dollar, we already done this. I just didn't take it. I was simply waiting for the pullback here to reject and retest and then go. I would have entered here, but it's not going. As I said, Canadian dollar's weak, right? And oil is not giving it much strength. As oil continues to drop down to our areas, TP1, TP2, you will no doubt find that this will push up. When this gets to here, you will suddenly find that oil will be in our perfect area to buy. We can jump in and buy that. You'll probably find at the same time, Aussie has some negative news and the price of oil will shoot up, which then means the Canadian dollar gets strength from here and this will start to melt. And you can then enter a sell on here while you're in a buy on oil. Okay, now you don't just base it on that. Of course, you need context again. You need to go back, check the news, make sure that's right, see which is strong and blah, blah, blah. But you get the idea, right? And remember what I've said here so you can go back and check it, okay? Even if you want to save this video, you can save it, no problem. Go back and rewatch it, in 2 weeks' time, 3 weeks' time, and we'll see how we go. This one I had marked up. I didn't take it. I can't remember why I didn't take it. I think it already played out a fair bit, and I was just waiting for a retest, and then I would take it, but I missed it. Such is life. You're always going to miss trades, guys. Don't ever worry about that. This here, I'm going to show you this because it's beautiful, right? This is how I mark up entries. So obviously, I look at the swing areas from the previous low to the previous high. And I really love to trade from the 618 or the 786. The 786 is my preferred area of value because that's what these are, right? These are areas of value. Now, how do you know where to mark up these boxes within those areas of value? I'm going to show you right now. So I'm going to zoom in so you can see it. See when you get this here, not all of these blues, but see when you get this blue, this short, small candle, right? And then you get this massive engulfing candle, and then the markets crack on. That shows you that that's where volume kicked in, right? You can even use a volume indicator if you wish, and it will show you the same thing, but you don't even need to use it. You can literally mark up this candle here, right? And then for my method, guys, all I'm doing, right? Wait to delete this so you can see the screen better. All I'm doing is I'm waiting. When this market is going up and up and up, I'm ignoring it. I'm not trading this. I'm sitting on my hands thinking, right, how long have we got to go? And I'm only taking this trade when it comes back and retest this area. Now, this was a huge news move. I didn't take that. I think I was away filming YouTube. I have an adventure channel sponsored by North Face and stuff, and I do that on a Friday, Saturday, Sunday, Monday, and I trade Tuesday, Wednesday, Thursdays, right? So I must have been away and I missed that trade. But look, it fucking played out, right? Played out to a T. Now look at this again. This happens over and over again. Look here. You've got this small candle. You've got the large engulfing. All you're going to do is draw your box from here, drag it across. And when this market plays out, you could enter that if you wish, right? You could absolutely enter it. I just don't, right? I'm just waiting like a sniper for this to come all the way back round and retest this area. When it retests and rejects this area, you can either enter after this close, or if you wanted more confirmation, this candle close, that's your entry. You then enter on that, and away you go. Your stop loss is below here, and away you go. That's your entry, guys, right? It is that fucking simple. And I'm going to show you on other pairs. There it is again. I'm just waiting for, what's this, Aussie to come all the way back around. This here was just Japanese bank interference. I think they lumped in 60 billion into the yen to kind of give it a bit of, help it because the yen's fucked. I'm just waiting. I am not touching a single trade. I'm not entering sales. I'm not getting FOMO and all that. I'm not trying to catch, the big meltdown, trying to catch it from the swing high to the swing low. It's all fucking bollocks. You just wait until it comes down, retest this area, then you're entering buys, okay? Because the Aussie economy is far stronger than the Japanese economy. The Japanese economy is lower than snake shit, okay? So you would never sell it. Are there people selling it? Yes, there are. There'll be millions of retailers that have no idea what they're doing selling this, okay? Let's see what retailers are doing, right, out of interest, and let's see what banks are doing. So this is called Prime Market Terminal. I use this for data. So you use the news for fundamental economic news, right, and information, and I use this for data. So this, look, if you look down here, it says, if you can't read it, it says 76.9% of all traders lose money with this broker. That's retail traders, right? There's loads of stuff here. Don't get wrapped up. I know it kind of fries your head, but just focus on this just now. When it says DXM, that means dumb money index, right? Basically, all the fucking idiots at home trading who have no idea about fundamentals. They just think fucking drawing a little triangle on your page and you're going to be a millionaire. Well, Lambo, those kind of guys. They're all fucking sales, right? Let's see what the banks are doing. Sometimes the banks are in alignment. So now they're kind of 50-50. So now so banks are hedging now, right? So banks are willing to take that risk to go in half and half. Now let's have a look at GJ, and I'll give you another example based on those two pairs, right? If we look at GJ, banks are all in buys. Now, I'll explain. This is called COT. COT means commitment of traders, right? Now, how this works is every single Wednesday by law, all the big banks, JP Morgan, Goldman Sachs, Merrill Lynch, fucking hedge funds, private funds, and all this, they must submit all of the trades that they are in every Wednesday. It's to kind of stop insider trading stuff, right? Or to try and prevent it. They submit them every Wednesday. They get verified kind of Tuesday, Friday, and every single Friday it then gets renewed on platforms like this, what the numbers are. So this is genuine data. So 88.5k of institutions are buying, pound yen right now, right? Let's look at what retail traders are doing. Retail traders are in sales. Why? So look at it this way, right? One single pip movement in a candle is the equivalent of a monetary value of 100 million USD, right? So therefore, if you measure a candle and that candle's 11 pips, that's 1.1 billion dollars has been traded, has switched hands within that one candle. So if you're a retail trader, right, even if you have such a large account that your stop loss is 200 grand, right? Your stop loss is a 200 grand stop loss. You do not have enough money to make this market move. All retail traders on the entire planet combined, we do not have enough volume of funds to actually push the market in our direction. We simply don't have it. So now that you know that information, right? If all retailers are in sales and all the banks are in fucking buys, and if you look here, they've increased their long by 16,500, right? These are the people who have the amount of capital and volume to make the market move. So what are you going to do? Are you going to copy retailers who can't move the market, or do you want to be in line with the banks? You can't just trade based on that. You have to then look at fundamental information. So the pound, without going through it all again, because we've just covered it all, right? The pound is a million times stronger. The British economy is a million times stronger than the Japanese yen. So if you're working for fucking Merrill Lynch, you've got a $5 billion account, right? You're about to place a $200 million trade, and your task for your company is to make money. You have to invest that $200 million essentially into an economy, right? When you're buying or selling a currency, that means you're saying that this country's economy is better than that country's economy. That's what you're saying, right? So if you're looking at GBP on the left-hand side, and you're looking at yen on the right, and everything's coming in negative and low in the yen, everything's coming in positive for the pound, you're then deciding, right, I need to put this 200 million into an economy which gives me the least amount of risk. There's always risk, but the one which gives me the least amount of risk with the higher probability of a greater return, a greater yield. Now, if you're looking at the British economy, it's been great for years and it's still doing great, and there's no way they're going to cut rates. And you're looking at the Japanese economy and it's shit. Their GDP shit, their inflation rate is shit, blah, blah, blah. Which one are you going to choose? You're not going to choose the Japanese economy, which means you're not going to sell pound yen. You're going to choose the British economy. Do you see what I'm saying? How this all, you need to apply the context and how this all intertwines and mingles, right? That's it, lads. It's not fucking complicated, right? Once you get the hang of it, it's really not fucking complicated. So let's jump across and look at these pairs. And by the way, look, see if there's nothing to trade. There's fucking nothing to trade, right? If the market's flying like that, don't try and catch it as it's flying. Just fucking wait, right? And this here, look, when you see this blue candle, this small white and this large white, that is not what is deemed imbalance. What is deemed kind of imbalance is like this, like a small candle, large white. And you can see, look, if you marked up this candle, dragged it across, it goes away and it fucking retests that area and then goes, right? That there is not imbalanced. I don't know why it's marked up. Maybe I was showing someone a lesson. This here is, though. Like, if I move that down here, that is. So if it then came back down and retested that, that'd be fantastic, right? And I'll show you stuff with the fib as well. This never came back and retested, which is absolutely fine. I'd simply be waiting for this to come back up, retest. Wait there. That's wrong. There we go. Retest here, and then looking for sales. So I already know, right? I already know that I do not give a shit what this market does until it hits this box. Then it doesn't mean I'm going to sell right away because it might push on through to this one, right? But I know that my areas of interest is this area here and this area here. Anything that the market does outside of that, I do not give a shit. Now, what that does is that prevents me from having an emotional reaction to the market. It prevents me from jumping into shit trades through FOMO, right? Like if this candle starts flying down here and starts, melting, I ain't entering that. If this candle starts flying up and, bouncing around giving these big pins, I'm not getting excited and trying to catch that. I do not care what it does until it bounces around, rejects in here and gives me a real sign that it's going to go, That's it. And obviously, before you would enter, you would check the fundamental data again, and you'd look at your notepad. It's very good to make this notepad because it's not going to change in a week, right? To see which one. So if you look, that was Euro AUD. There we go. AUD is strong. Euro is neutral. So that would be sell. So that means that even though if this comes up here, I'm not taking the buy. I'm waiting for it to reject here and take it down. Okay. Now, can you trade strong against neutral? Yes, you can, and you can be fairly profitable with it. More often than not, I just don't do it. It's just part of my own rules, right? You'll all have your own rules. Generally, I trade strong against weak. I don't trade strong against strong. I don't trade strong against neutral or weak against neutral. Or neutral against neutral. I just don't do it. I just pick a strong pair and I match that up to a weak pair, all right? Because it gives you the higher probability. You want to be trading. It gives you the more, instead of getting this range. So if you're trading like strong against neutral, what you'll get moves, right? But you just get this rangy bullshit, You just get this rangy bullshit. I don't want that. If you trade strong against weak, this is what you get. Look. That is what you get. And that's what I want to trade. When a pair is like one's strong and one's neutral, this is the bullshit you get. That's just a big, massive range, right? I don't want to trade that. Can you trade a range? Yes, of course you can. I just don't do it, all right? I know people who are very successful trading ranges. Look, if you traded this range, here it is again. Look, bang, comes up, retest, melts, retest, melts, retest, melts. If you created this range here, I already said it in the previous video when I first drew up these boxes. When it comes here, you could enter sells. When it comes here, you could enter buys. And you could do very well. I'm just not interested, right? This This I'm not interested in. This here on the left, that is what I'm interested in. All right, that is what I'm interested in. Your entry would be around here. Okay, here's your support, support, support. I'll drag this out so I can show you. Breaks the support, comes back. The support then becomes the new resistance, and you will see this time and time again. Retest the resistance, entry, stop loss above these previous highs up here in case it does give you the retest to here. You want to be safe, right? The stop loss needs to go where the stop loss needs to go. Don't be giving yourself this bullshit, oh, just put it here so I can get a bigger lot size. And no, because what will happen is you get fucking stopped out and then it'll melt. How many times has it happened to you? You've been stopped out, it's melted or flew in your direction, and you'll be like, fuck's sake, it stopped me out. The stop loss needs to go where it needs to go. Put the fucking stop loss above these previous highs. Don't just put it here, right? Obviously, adjust your lot size accordingly, okay? What have we got here? Euro CHF. So both of them are neutral. So look, when you've got two pairs which are neutral, this is why I don't trade it. Because this is what you get. Look, you get this rangy bullshit. Could you make money from here to here? Of course you could, right? It's not about just making money. It's about taking the best trades, right? Here's another area marked up. Lads caught this trade. I didn't bother with it. I didn't bother with it because it's the both of them are neutral. I just don't trade it, all right? Euro GBP, I also gave this trade. I only moved this box over here because when it was here and I was trying to like show you stuff, look, it kept annoying me, right? Flashing up all the time. So that's why I moved this over here. But I already, if you go back 2-3 weeks ago in my trade review videos, I already called this, like literally when this market was here. I said, well, what we're looking for is it's either going to break above and just bounce around here and keep going, or if it breaks below, you want it to retest this previous support once broken, now becomes the new resistance. It then comes up and it will retest that. If you think I'm bullshitting you, go back and fucking back test it as long as you like. It always fucking happens. I'm telling you right now. Look, I'll show you. Support, support, support. Support gets broken. The old support becomes the new resistance. Entry for sales. Away you go. Fucking, I'm telling you, if you think I'm bullshitting you, go and back test it. You will literally blow your mind and be like, fucking hell, that happens every time. I'm telling you, lads, it really does. I already gave this, so I always mark up the charts so that our students can copy up the charts. And if I'm sleeping or if you want to take this trade, I already said I'm not taking this trade, but I gave it anyway, right? If you want to take it, you can crack on. I already said I wasn't taking this. However, I give it so that any of our students can mark up the charts, and when this plays out, you can take the trade and make money, okay? Euro USD, we've got Euro at neutral, USD at strong. So like it's not a pair. It's not a pair that I trade because one's neutral and one's strong. So they're kind of eeky peekies. And this, like, this is what happens when you trade a weak against a strong against neutral, or a weak against a neutral. You just get this big massive range. Look at it. I don't trade it. This is what I want, guys. I don't care if it's an uptrend or a downtrend. I just want a trend, right? You can just enter tiny risk here, comes back up, enter again, comes, breaks away, comes back up. Look, retest that previous support, comes the resistance, retest it, enter, away you go. Here's the support, retest it. I'm just going to draw it out because a picture paints 1,000 words, right? Look, new support gets broken. The support becomes the resistance, retest, entry, away you go, right? Here's the previous support down here, so I'll just move it down. Here's the previous support. Breaks that support, becomes the new resistance. Retest the resistance, away it goes. Fucking hell. Look. Here's your support. Breaks the support, comes back up, becomes the new resistance. Retest that resistance. That's your entry. Stop loss above here. Away you go. Previous support, the lowest area, right? Breaks that support, becomes the new resistance. Retest that resistance. There's your entry. Away you go. I'm going to do it one more time just to fucking annoy you. Look, to show you how insane this is, guys. Look. Support, breaks the support, becomes the new resistance. Retests it, entry, away you go. I don't know what else to say, lads. It's fucking unbelievable. And you can go away and do this yourself on the charts, all right? It's insane. It's one of these things, once you see it, you can't unsee it, right? EJ is 1,000,000% buys, but obviously you need to wait for these retests, right? I really want to. You could trade from here. It's not my preferred entry. My preferred entry would be down here or down here, but that's going to take a long time, right? So because of where it is now, you're kind of looking at here or here. So time will tell. Nowhere near entry points yet, okay? I would not be trading it from here up. I mean, look, it could very well do this, right? It could very well come back down and retest this, reject, and then go. Yes, it could, but it's just way, way overvalued. Not overbought and oversold, overvalued. For example, if you bought a Rolex, like let's say Daytona or something, 2, 3 years ago, you'd have paid about 29 grand for it because they were at their peak. Their prices were just fucking crazy, right? And you couldn't go into Rolex and buy a new Rolex because they didn't have any. And because of COVID, they shut the factory and they weren't making any. So there was this massive demand and not enough supply. So if you bought a Rolex like 3 years ago, you'd have paid like 29 grand for that particular one, right? Now, 3 years later, that same watch is going on sale for like 16 grand. They've massively depreciated. Why? It's because when people were buying them, they were massively overvalued. The value of them was crazy. They weren't worth what they're paying. So right now, EG is far too overvalued. It's not worth paying for it right now. A good area of value is actually down here. Not even here, to be honest with you. It's actually down here, but it may take some time. If it did come down here, right, I would potentially take the trade. But it will be I'll have to reassess it when it finally gets it, and I will then look at economic data fundamentals, then the data on the likes of prime market terminal to see what retailers and banks are doing. If it gets to here and banks are all in sales, I ain't gonna fucking buy it, am I? Because that then kind of paints a picture. They're potentially gonna push this down lower, right? So that's the way you have to look at it. So even if it did come to here and reject, I would not be buying it because it's way too overvalued. Okay, I hope that kind of makes sense to you. Euro NZD, yeah, Euro's neutral. NZD is weak. What do we see here? It's just ranging, guys. It's just ranging. Yes, you could have entered this. I've already drawn it up. This week. If you go back 2, 3 weeks, you'll see I drew this up 2, 3 weeks ago. I gave the prediction what may happen. Just because I was right here doesn't mean I knew I was right when I predicted it. Absolutely not. Anyone that claims to say that is a dick. I'm just telling you the predictions come because they're high probability of things which may happen in the markets, right? And it does happen more often than not, as long as you're doing it based on fucking economic data and not based on going like this, Oh, if it fucking, where are we? Oh, if this breaks that line, it's gonna fly. Fuck off. Bullshit. What you normally find actually is you get retailers that trade that way, right? Let me just drag this out. They'll say, oh man, look, if it breaks here, it's gonna go. The market will break here, and what it'll do is because the economy's still shit, and as soon as it breaks here, you get a little bit of a pullback, boom, back up. They'll be entering buys, right? And because the economy is, let's say pound goes weak and Aussie goes strong, it will just go like that, and it will fucking melt. I'm telling you. So all this crisscross triangle shit is a load of shit, guys. Unless you're doing it based on, you're incorporating it with genuine economic data, okay? If you think I'm bullshitting, you're right. And I'm not hating on technical analysis. Technical analysis is extremely important. You can clearly see my screen is full of it, right? It has its place, but you just need to know how to use it in context with world data, right? And areas of value. So I'm not hating on technical analysis, but you need to use it correctly. And if you think I'm bullshitting you, do you think for 1 second that people in fucking JP Morgan are going like this? Right, if this market fucking breaks below here, I'm gonna put 300 million into that just because this candle is broke low. Are they fucked? If you're calling me a dickhead right now from the other side of the screen saying I'm full of shit, you've lost your fucking mind. People in Goldman Sachs, JP Morgan, wherever, they do not lump in 200 million, 3, 4, 500 million into trades because it breaks a fucking line that they've just plotted on a screen, okay? They do it based on data, right? They look at the same data as this and they're like, right, what are other fucking banks doing? If you come on here, there's actually bank reports on here. I'll show you them. Where are they? Is it files? There we go. Look, here's all the bank reports. Wells Fargo, RBC, Bank of America Securities, Credit Agricole, Citi FX, Goldman Sachs. Like, we have access to all of these bank reports. This is what they're basing on. They're looking at what other banks are doing as well. Now, if you jump on one of these, right, and they're saying, fucking hell, the Bank of Australia is bullish on fucking, I don't know, Euro USD, it doesn't mean that's going to come out, because there may be plenty of other banks who are bearish. Do you know what I mean? So you can't just look at a bank and say, oh, I'm going to copy their trade, because banks are wrong as well, guys. We seem to think that all these banks know all the answers. They fucking don't. They just have access to more data than you and I, right? And they have informed decisions. So Chris Cathy, an ex-Goldman Sachs trader who I just watched his podcast just now, and it was a very insightful podcast. What he was saying was, for retail traders, in a way, trading at the retail level, like you and I right now, it can actually be much harder. And the reason is, we're sitting here in front of our desk. We have to do all the work by ourselves. We don't have a team of analysts. We don't have a team of fucking people coming up and saying, okay, we don't go into a boardroom meeting and say, right, this is where the pound's projected to go over this next 12 months, blah. We don't have any of that. We have to look at this data and we have to become our own analysts, right? And then when we go to place a trade, we have to place that trade ourselves. We have to place a trade based on our own logic, our own thought, our own trade ideas, our own plan, all the information that we've bothered our arse to work and read through these bank statements and blah, blah, blah. If you haven't done it, then you haven't put in the work, right? And you don't need to read all of these. I'm not going to bore you. You only need to read a couple, blah, blah, blah. Anyway, it's not that important. But Chris Cathy was saying, like, retail trading can be much harder than institutional trading. Yes, institutional will be harder emotion-wise until you've learned to control it, because they're trading phenomenal amounts of money, right? Hundreds of millions each time. We are trading, fucking a couple of grand each time. But we're doing it all by ourselves. So the weight of our own money is on our shoulders. Whereas in institutions, you don't have Chris Cathy just sitting there trading by himself. There's 3-4 traders, and they're all sitting around as mates talking to each other. They're sharing trade ideas, and they're discussing which idea looks to be good and which idea doesn't look to be good, why it looks good and why it doesn't look good. And then they all lump in on the one idea that they believe in. So they have this kind of like group community that they can kind of support each other. Whereas you and I as retail traders, we don't have that. Like, all of our emotion is, we have to work on that ourselves, and that's how it can be harder. You can see that podcast on YouTube on a channel called Words of Wisdom. It's the one with Chris Cathy. It's a very good podcast. I highly recommend you watch it. He covers some very good points on that. Here's another one I gave. Look, lads, look. Resistance breaks the resistance. It's just the opposite. Once the resistance is broken, that resistance becomes the new support. Retest the support, entry, and away you go. I didn't take this trade. The reason why I didn't take it at this point, oil was doing well. So when pound news wasn't good, right, which means weakness, which is probably here, and oil was actually doing quite well at that point. Oil was in like a kind of buy phase. It hadn't turned into its sell phase yet. So that gave strength to the Canadian dollar. And then I think it was 2 weeks ago, Canadian dollar numbers came in quite good, actually. Their economic data came in quite good, so like month on month. Excuse me. So it gave this kind of intraday push, right? So I didn't trade it, but I did give it as an area, and I said to the lads, if you want to trade it, you can go. You can watch the video I done maybe a week ago or 2 weeks ago, where I actually, when this market had only reached here, hadn't even like peaked yet, right? It only came to here, and I explained this trade, and I gave it out. If it comes here, bang, away it goes. I didn't take it for those reasons. Very important thing. Just because there is a trade does not mean that you have to take it. All right? It doesn't mean you have to take it. You can pick and choose what you want to trade. GJ again, guys. I ain't really wanting to touch GJ until it comes down to here, minimum, or here. I'm not even going to touch it when it comes here. I'm not. I'll have a look at it, but I ain't really planning on touching it, right? And that's going to be a long time before I enter GJ. That's why I haven't even marked it. Pound NZD, pound of strong NZD is shit. You can see here I already marked it up. I did mark this, but I was actually waiting for it to give us a deeper retest to here, which didn't happen. You know, you win some, you lose some. I had marked this up, but I already said to the guys, I'm not entering the buy. I'm going to wait for it to come back and retest here. Then I'm going to enter. We didn't get that retest, guys. So therefore, I didn't enter the buy. But that would have been a great trade. So if you copied it, then well done. All right. GBP NZD. Beautiful area here. Now look, so here's one for you. I've already drawn it up, right? Already predicted this. We'll just move this out of the way. There we go. Already predicted this ages ago. If it breaks through, what we're waiting for now is come down, retest, and obviously the retest. I can move this in. The retest is your entry. If this breaks above, boom, 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 comes back down, retests this, the previous resistance now becomes the new support. Boom, retest here, entry, away you go. So there's a free trade for you, right? I don't know if I'll take, I already know I ain't taking it because it's pound USD and both of them are the strongest currencies in the world. So what you're going to get, you're just going to get a real shitty range, right? If any of you have ever traded pound USD or euro USD, you'll find they're really shit, right? They just bounce around and it moves slow as hell. I ain't interested. But if you're interested to take this trade, you can carry on and take it, all right? NZD, USD. Yeah, it's just shit. I'm not even... Oi! I'm not even going to bother taking this trade. NZD CAD. Ain't going to bother. You can see it played out. Look at these areas again, guys. Look, I'll zoom into the candles and show you. Because you might be thinking, why have you marked that box up there? Look, it's actually, I've marked it all across, but it's actually here. See that small white candle? And then you've got the large blue engulfing, right? You want to mark up the small white one. And you just wait for the market to come back and retest it. That's not retesting it. What it's doing here is, look, previous support becomes the next resistance, right? So you could trade that. You've got the engulfing. You could absolutely trade it, right? But you really want to wait for it to come back and retest this area. And you can see it's taken a very, very long time. You're probably talking maybe 2 months for it to come back and do it. But when it comes back and retests it, reject, enter, away you go. It's a perfectly good trade if you like to trade that kind of pair. Why I didn't take it? Look, it's just a big range. NZD is weak. Canadian dollar is weak. Why would I trade a weak pair against a weak pair? Yes, you can make money doing it, but you're just trading in this horrible, shitty range, right? It's flat as a pancake, so I just don't trade it. I will trade it eventually when one becomes strong and one becomes weak, right? Just not yet. That's pants. And that's pretty much it for now, lads. Look, absolutely stinking. So you can see here, look, it's hit all the areas time and time again. Whenever it hits here, if you're a range trader, when it hits these ranges, you sell. When it hits these lows, you buy. I don't trade ranges. It's obviously different for you guys. You guys can take far more trades than me if you wish because you're risking your own capital, right? I trade a PAM account. Like, if you don't know what that is, it's essentially a copy trader, right? Where clients lump in and they attach their accounts to my account. And whenever I place a trade, it places it for them, right? I'm just created a new one literally last week and I'm loading it up with all my clients now from the last broker, just purely for customer service reasons. Our last broker was dog shit. This broker's very good. So I'm going to load that up, and I think in the next 2 months it's probably going to be over 2-3 million in there, and you will see me trade that live. If you're in our Discord group, which is right here, what you've done here, look, you are live. I always trade, anytime I enter a trade, I do it live in front of everyone, so I can explain to all the students that want to jump on and watch the live trading, why am I taking this trade? And I will cover every single point as to why I'm taking this trade, okay? And all the clients in my PAM can actually watch me trade. It's a minimum 10K if any of you want to join, whatever. But yeah, they can watch it. Look, general chat. So my business partner, Lee, he gives scalps. I'm a swing trader, right? Lee is a scalp trader. He's phenomenal at it. And we give everyone a trade. So look at this. Can I zoom in on that? That says $425. That's Alex copying one of our trades. This is Suresh, £89. 89 USD. Ian, what's that? What's he up now? 91, 29, 62, 10. Look, this is them giving us the trades here. Us giving them the trades there, sorry. Big Lee, he's up $2,000. Lee gives the scalp trades. There's Alex again, another 260. Look, there's Suresh again, another 114. So you can see, you can actually see trade results here from all members. All right, that was my oil, 5.5K. That's all right. And then we have student reviews here. You can come and have a read at the reviews. We've got everything you need, guys. And like I said, we offer full mentorship. We have the videos to teach you our methods. I've broken mine down to 6 videos, right? 6 videos to be able to conquer and kind of master my method. Of course, you then have to learn fundamentals on top of that, which takes longer, right? But to get my technical method, 6 videos is all you need. And on top of us giving the actual signal, right, guys, we are buying now, right, guys, we're selling now, which you can copy. Like I said, I actually do live trading. So whenever I see like, this trade's about to come in, I just jump on a live video like this and you guys can come and ask me questions while we're in it. You guys can copy the trade at the exact same time as me and make money in line with me, all right? And in weeks like this, where there really isn't much, there's really nothing happening for my style of trading, right? Nothing. The markets are all really shit right now because I like trends, right? I don't trade ranges. What I do is I offer mentorship every single day, like one-on-one, and we do not charge any more for it. We even give you a month completely free, so you can join us for 1 month without paying a fucking penny, and you can see if we are bullshitters or not. You know, we put our money where our mouth is, so you can actually test us out first, right? So when markets are really poor like this, what I say to the guys is, lads, there's no trades for me to give you right now. If you want to jump on and do one-on-ones mentorship, where I'll say to you, right, look at this pair, pretend that, forget the real fundamental data. Let's pretend that this pair is a sell. Show me where you would mark up your charts, and they'll give it, and I'll say, right, tell me the reason why you chose that, blum blum blum, and I'll say whether it's correct or whether it's wrong, why it's correct or why it's wrong. Okay, let's look at this pair. Let's pretend this pair is buys. Show me where you're going to mark up your chart now. Why would you enter there, and blah blah blah. Where would you put your stop loss? Where would your TP1 be? Where would your TP2 be? And we do the kind of interaction one-to-ones, right? And we don't charge any more for it, guys, right? And even at the end of your month trial, we only charge 97 quid a month. You'll fucking make that back just copying your trades in one single trade, right? So that's pretty much it. The only thing that is in my vision right now is oil. I think Monday, I really want buys on oil, right? I'm not really interested in sales, but this is remember, this is the daily chart. So this is a really good area. I'm going to see what this candle paints on Monday. If this candle closes, I will jump into this. Low risk, just maybe 1% or something like that. I'll jump into this and I will look to take, this will be my TP1. If it still continues, then I'll let it go down to TP2. All right. And it could probably make from here to here. I mean, from here to here, I made 5.5 grand. So here to here, it could probably make about another 8 to 12 grand there, depending on the lot sizes that I use. So it can be worth it. It could be a worthwhile trade. Cheeky little 8 to 10 grand here. And then on the way back up, this could be a good 20, maybe even 25 grand trade. Okay. And like I said, I'll do it all live. That's pretty much it, guys. Let's have a quick look at indices. So yeah, I'm just waiting for it to come back down here. Reject. Look, it happens. Look, boom, breaks away, retest, goes, breaks away. Want to see the retest, goes. I'd like to see. It could also come down here as well. I'll move that up. This would be a beautiful area because that's bang on the small candle and engulfing, right? That'd be beautiful. If it retests here, bang, and away it goes. Let's have a look. They're all pretty much the same. Yeah, look, see, I've marked up both of them here. Yeah, there's nothing yet. So when it comes to indices, you always really want to be buying, right? Because they just always go up. Yes, of course, they come down, but they're just like retests to bring them back down to areas of value. They're always buys. So, pardon me, I would suggest that you don't really bother selling indices. Just wait for them to come back down to your area. Look, previous resistance breaks, becomes the new support. Support retest, rejects, and goes. It fucking happens every time. Same again. Look, resistance breaks the resistance, comes back, tests that resistance. The resistance comes the new support, and away it goes. Just wait. People lose money in trading because they can't fucking wait. They can't sit down for 2 weeks and not take a trade, right? I can happily do it. I could sit here for a fucking month and not take a single trade because I am not here to trade. I'm here to make money, right? And the money is made in the patience. That's why we spell patience P-A-Y, shints, patience. And that's pretty much it, lads. If you want to jump across to our Discord and try us out, like I said, we give you a month completely free. Um, if you're watching this on YouTube, I will put the link for the free trial down below. Please remember to follow the details. We literally give it step by step where we tell you you must type in free trial. And sometimes people don't do it. If you don't type in free trial, it will instantly charge you from your bank card. It will charge you the 97 quid right away. It will not give you the free trial. And there's nothing we can do about it. Like, we can't go into the back end and change it because the payment is not taken by us. It's taken by Stripe. So, like, there's fuck all we can do about it. We've literally made it as clear as possible, right? So please follow the instructions so that you get a free month. At the end of that month, if you think we are bullshitters and you haven't, made any money, if you've copied their trades and whatever, and you haven't got any value from us, and you think, you know what, I'm better off doing it myself, you can cancel at any time. All you do is log into the Trading Guys website on your account that you make, right, and just hit cancel subscription, and it will not charge you any money. Okay. We also have an affiliate program. If you would like, if you're someone who's great at social media, making reels and blah 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 on Instagram, and you want to monetize on that, you can become an affiliate. And from the £97 per month from anyone who signs up via your affiliate link, we will pay you 40% commission per person per month. So if you're at affiliate marketing, you can make a shit ton of money by promoting us. And the thing is, your clients will make money by joining us, right? Because we're consistently making money, as you can see. That's pretty much it, guys. I'm Ryan Mack. This is the Trading Guys. I hope you enjoyed this. If so, please share it with anyone who you think would benefit from this type of stuff. And yeah, I'll see you in the Discord free trial. Let's go.